Hey, traders and investors, welcome to the TA Live Wednesday live stream. I'm Todd Gordon, founder of Trading Analysis. I got the Trading Analysis team standing by. I hope you guys are doing well here. Happy Thanksgiving to everyone here in the U.S. Kind of the last day before we go home to a quarantine, hopefully smaller than normal Thanksgiving time with the family. It's I think we all need it. Holy cow, I know I'm looking forward to it. Again, we'll be missing a few family members, as I'm sure you guys are as well, but that's the world we live in. So other than that, market's closed tomorrow and then a half-day Friday. Can't believe it's Thanksgiving, 1 month to go in a year that will certainly go down in the history books. It's unbelievable what we've all been through as a society, as a species. So, you know, certainly one will never forget. Markets just never seem to surprise us. It's amazing all the movement we're seeing here, the rotation. We're going to talk about that in the show, the sector rotation, industry group rotation, movement from large cap into medium and small cap. Not just value, but in growth as well. We've been doing a lot of sector rotation work here. All is well. We've got some a lot of data actually today. I think we had income and spending, and I think we had preliminary Q3 GDP, which was flat, 33.1 on the calendar. Unemployment claims was a little higher than expected, 778 on expectations, 732. Core durable was very good, 1.3 on expectations of 0.5. And the headline number was 1.3 on expectations of 1. A lot of data out. And then 10 o'clock, we've got the UMISH consumer sentiment report here. Just taking a look. I don't need the screen yet, Bennett. Just looking at the futures. Very flat today. Looks like inside of 0.25% up or down between the NASDAQ and the RUT. So no big deal in the pre-market. Things look pretty quiet with the exception of crude. We'll talk about that in a second. Crude oil moving, energy stocks really moving, kind of an unbelievable sort of movement there. We've seen. I did CNBC yesterday with my buddy Mark Tepper for usually I've kind of fallen into the Tuesday spot here at 2 to 2:30. We talked about Bitcoin and we talked about energy stocks. And one thing I mentioned there is if you take a look at the XLE, the sector spider that covers the energy, we're up 40%. In 1 month, like an entire sector. Granted, it's only probably 2 or 3% of the S&P right now in terms of weighting, but that's a massive, massive move. And Terry Long, who's our research director at Trading Analysis, helped me prep because he was a senior economist at Exxon in his career, and then he's spending his time in his retirement job with us. But very good insight there. He helped me prep and. We were making the point that, I don't think this is the start of a new energy bull market. It could be sort of short covering heading in. When you get that kind of movement, guys, it really doesn't say to me that the entire industry, the supply issue with crude has come off. There's a new the demand side of the equation. Yes, possibly demand is returning. We're seeing some pretty good rotation into the airlines, into some of the consumer discretionary travel names, some of the hotels looking good. We have 3 consecutive good pieces of news on the COVID vaccine. So maybe, but let me just throw the chart up here. Bennett, if you don't mind, flip me over to I'll start with the XLE here right now and make sure I'm good here. Somebody yell at me if I literally have about 7 feet of monitors for this, and it's still not enough. Not for trading and investing, but for this. So if you guys can see it, the possible wave count still does look to be like we may be in a 4th wave consolidation here in the energy sector. This doesn't look like it's the end yet. We could have a little bit of C wave resistance up here in XLE, kind of consolidate for a while, which does make sense, and a potential move back down to the lows. But the only thing I'd caution you, and this is a discussion I have with the team quite a bit, is look, when you're doing Elliott wave on stocks with limited history, you have to be very careful. You have to take it with a grain of salt, because the Elliott wave theory, which we talk about so much, is really designed to track human progress, and the more productive we are as a society, the higher our businesses, and the more commerce is transacted, the higher our businesses are valued, the higher our stock prices go. So it's like it's a report card of how we're doing in society. And if you just take a stock that's been around for a couple of years, or even an ETF that's only been around 20 years, it's not really tracking at the core of what Elliott wave is meant to do. So if you look at the XLE back in the 90s, you could say it's 3 waves up and also 3 waves down. So it doesn't really leave you with a whole bunch. The real heart of Elliott wave, which you guys know and love, is meant to look at the Dow back 100 years and the S&P back 70 years, and even markets before that. So that's XLE. Let's kind of take a look here. Oh, there's something else I was going to mention along those lines. I don't know if you guys follow. I just wanted to talk about this quick. I don't know if you guys follow Portnoy at all. How many of you guys are watching Dave Portnoy's Davey Day Trader stuff? Let me just get the comments out. How many of you guys watching that? I kind of think it's funny. I enjoy all the fresh blood that he's bringing to the stock market and investing game. He's obviously going after the Robinhood young traders who used to be betting on sports, and now he's getting them involved in stock trading. Dave Portnoy, if you don't know, he's the founder of Barstool Sports, and really good at social media marketing and content. So he's been in this little bit of a spat with this guy named Ross Gerber, who's in a similar business to we are. He runs an RIA, which is a registered investment advisor, which is what I'm forming as well, Inside Edge Capital Management. So he's similar. They got a pretty good debate. And he's basically, Portnoy is calling out the suits, guys on Wall Street who are making this investing game seem much harder than it is. They're just trying to collect fees. They're trying to scare you out. They're trying to get you in and out and blah, blah, blah. And he's like, oh, anybody can do this. Anybody can do this. If you guys saw that interview, let me know. I thought it was really good. And I thought Ross did kind of a good job. And I've met Portnoy a couple of times. I met him at the NASDAQ for CBC and a couple of times here in Saratoga. I think he would remember me, but he kind of got schooled in that. And there was one thing that I thought was interesting, which Portnoy kept pushing him and saying, like, look, you gotta, how do you make money? How do you take fees if you have a down year? And that could be the case in investing or trading. And he started to say, well, look, a good trader, a good investor has a good financial plan and knows how to sort of set his assets up to ensure his long-term success. So financial planning is one part of it. But the other part is like, look, it's how you behave in the down markets that makes all the difference. It's how you trade in down markets. And we don't have a down market here, but we've had a very sideways and a very crazy expanding volatility, higher highs, lower lows since 2017. these are the kind of markets you pay for guidance. You go to a company like Trading Analysis for the trading advice. You go to a money management company who knows how to help you behave in the down market. So, this is these are the kind of volatile markets that you really need somebody to kind of guide you along the right path for trading and/or investing. So, I just want to finish my little opening statements here and say, look, it's great to trade. It's great to trade. And I have a business. I've made a living for a decade on running a trading and analysis, short-term, medium-term trading and swing trading business. But guys, I think what I really want to be sure, and I've always put this statement, I've always been really clear when I'm running my trading business, I don't want you trading with any more than 10 or 20% of your investable capital in the short to medium term markets. The rest, you have to be very clear, and it has to have like a Chinese wall between your trading and investing accounts, and trading accounts and your investing accounts. Make sure you're properly allocated. Guys, the reason I'm saying this, and I'm going to finish up here real quick, I've had too many calls of clients or customers from Trading Analysis who are interested in coming to the money management business, and they said, Todd, I've kind of missed this whole run. I get caught up in the noise from guys like Davey Day Trader and all the short-term in and out and all the scare tactics and all the like, oh my God, there's a crash coming. I get too caught up in that, and I've missed this amazing run in the market. And if I went to the NASDAQ, it's even more extreme. So guys, don't try to time the markets with a majority of the market of your capital. I think we are going up. I have been bullish in the face of a lot of uncertainty. I think this stock market is in an uptrend. Elliott wave, as I began this, the Elliott wave shows us the path, our human productive capacity, how we're doing as a society, and it continues to go up. Don't get sucked in with all the noise. And trust me, I'm part of it sometimes with CNBC. We're always throwing this and that and this and that. But have a core plan as to what you're doing with your portfolio. And if you want to trade and have fun with us at the Trading Analysis Team, do it. Okay? Hopefully that makes sense. Let's bring in the Trading Analysis Team. Guys, good morning.
Good morning, Todd.
Good morning,
Happy Thanksgiving.
Yeah, happy Thanksgiving.
Yeah. You guys, big plans. I know, Terry, you got your son coming in, and but you're keeping it small. Bennett, what's going on with you?
I think we're going to have about 10 people together, but we've
wait, is it 10? Do you have that? Because we have the 10 quota. Cuomo sent us.
This is true.
Like, you can't have any more than 10. I'm like, okay.
If we count my dog, we're going to go over 10, but it's all right. No, it should be a good time. So I'm interested to see what the rest of the winter has to bring.
Nice. Alex, what do you have to be thankful for?
Well, lots of things. First, we are all healthy here, so that's the first thing. And secondly, I'm kind of looking to keep my composure due to daily work, which keeps me grounded. So the things are well. Lockdowns here are also on the question today. We have a government meeting, so probably we're gonna face a lockdown as well. So, but we are all good, and in this situation, you have to be thankful. You have a nice job with you guys, and you're healthy. So, I'm gonna use Thursday to update the chart room and do some stuff because it will be a pause in the market. So, always to do something.
Yeah. Good point. Don't feel bad. I think we're probably a week or two away from being locked down as well. But I mean, maybe our definitions of lockdown are different. But any day, things are going to shut back down. So, to your point, thank God we have the internet. Thank God we have an ability to talk to you guys on the live stream. We've been set up. We've been ready. We've been well prepared for this. And so yeah, let's do it, Bennett. Take it away, sir. We have the hard right edge coming up. There's a lot going on here. We're going to, back on the other side here, we're going to have Bennett get you caught up on the Elliott wave patterns and the charts.
Good morning, traders. Thank you all so much again for tuning in. Certainly been an interesting past few sessions here in the markets. We've finally got the new record all-time daily closing high for the S&P. We actually had a a record weekly close. I think it was a couple weeks back, but not many people picked up on that. So let's go full screen on the Motive Wave platform and dive into it here. So we're looking at the weekly chart of the S&P, and as Todd mentioned out of the open, we've essentially been existing in this period of expanding volatility, which started back in that run-up that we had to the January 2018 high. And you can see we've had a series of lower lows and higher highs, and that upside trend resistance line continues to be respected. In fact, going back to November 9th, which is the day Pfizer came out with their coronavirus news, we saw some really interesting pre-market activity. We started to see kind of the stay-at-home work from anywhere trade begin to unwind, although I still think many of those names look pretty healthy on the charts. And simultaneously, we saw names like Disney catching a bid up, I think 15, 20 points in the pre-market. It was a really interesting day. And getting off the weekly down to the daily chart, what ended up happening back on the 9th is we had an opening move there. Markets opened at 35.83. We had a high of 36.45, but we actually closed down at 35.50. Going into that particular move, we were completing kind of an initial 5-wave structure off of the C-wave lows here from October 30th. So what we're going to do is we're going to get off the daily chart. We're just going to focus in on this pattern and everything that's been happening since, and talk about where we might be going from here. So off the daily, quickly down to the 1-hour time frame. Last week, which was the 18th, we were looking for one final move up prior to a move down to, we were forecasting somewhere between 3,500 and 3,525. You'll notice we ended up printing about a 78.6% retracement of this move. And there's a couple of ways that we can look at this particular pattern and say, okay, perhaps it is a completed corrective pullback. So off the October 30th lows, a beautiful 5-wave motive impulsive rally, and really a fantastic example of having an extension within the motive impulsive trend that you're counting on the time frame that you're counting it. Here we have an up in 1, down in 2, a nice extended 5-wave move in orange wave 3, orange wave 4 pullback. And that's when we had the gap up on the 9th, which ultimately just completed this pattern and resulted in a fairly swift 3-wave move to the downside. There's a couple of ways that we can actually anchor this wave to. The first way in which we could do that is look at the November 12th area low as the end of the wave 2, or alternatively, we could actually move the overall wave 2 pullback and completion, the anchoring of that structure, to November 19th. What's really rather interesting is I'm going to take you down to a 15-minute chart, which we normally don't take you this into this small of a time frame, because things certainly can change, and it's always important to have the higher degree pattern in mind. But what ended up happening off the October 19th low is we have this expanding pattern, which can be counted as a leading expanding variety diagonal. That was met with a beautiful 3-wave measured move, 78.6% retracement, and now we're rallying what appears to be impulsively higher. Now, could this just be an initial head fake and we end up moving back down into this zone of support? Absolutely. And in fact, that particular interpretation is illustrated here. We've got an upside zone that would need to hold as resistance between 3660 and 3683. And in fact, you could even look at this as a completed 3-wave structure into yesterday's high. So while I do think ultimately we resolve higher and out of this kind of expanding pattern that we're seeing on the weekly time frame, there is the still possibility that we do correct back into this channel prior to resolving to the upside. But I remain bullish on the S&P. I'm still looking at this and approaching this as a post-4th wave move. We looked at last week 3 charts within the S&P that accounted for 16% of the weighting that also supported the idea that we are in a triangle. Excuse me, in a post-4th wave move. I was getting ahead of myself. Speaking of triangles, I want to update you all on the Tesla chart, as last week we had the kind of pattern of the week segment within my hard right edge presentation here, and we were looking at shares of Tesla. As you know, it's going to be added to the S&P starting December 21st in the consumer discretionary category. And this 4th wave pullback, initially taking you off the daily down to the 1-hour chart, was looking perhaps like a bit of an initial overreaction and maybe just kind of a head fake and still rolling back over into the triangle. That has since been proven to not be the case. We broke out of the 4th wave. We had a trade on with our members the past few days. We carried a trade from 355 upside broken wing call butterfly. Sold our last, or actually we still have a quarter size on, but we sold our last exit at yesterday at $6. So we took advantage of this initial post triangle breakout. And there's a couple of ways that you can kind of decompose this post-triangle move, one of which suggests we have a fourth wave pullback, move to new highs, and then you see the larger wave 2 set in. Alternatively, the move that we saw yesterday actually completed that. But overall, taking you back to the daily structure, I do see continued upside for this name. And if we just took kind of an old school post-triangle measured move in which we look for a post-triangle breakout that is equal to the widest part of the triangle, that would take you up here to the 600 handle at 598.89. So I like Tesla, great looking chart. Another chart to kind of illustrate the idea of post-triangle breakouts is that of the chart of Disney. In fact, here on the weekly, we had a long-term fourth wave triangle, as you can see, resolved to the upside. Another chart that we presented to you last week was that of Apple. And looking at Apple, let's go ahead and get off the weekly and down to the daily. We're tracking an ongoing wave 4 correction that really resembles that of a textbook Elliott wave triangle. You have lower highs, higher lows, and we're tracking a possible completion of this. And off the daily down to the 20-minute chart, we were looking for one final move down into support at around 112 to 113 prior to resolving out of this triangle. We do have one substructure that would support the idea that we move lower here in wave E, retest support, and then move higher. But I love this setup. This is a trade that we're going to be looking to put on with our members here in the coming weeks. Where this fourth wave triangle squares up, I think, is the bigger question that many Elliotticians are asking themselves right now. And I was going back and forth with the team yesterday, and we were looking at the higher degree fourth wave pullback. And what was really interesting is going back to the March lows, as you can see here, we had a very swift corrective move along with the markets. And at that point, we were looking at this as a wave 2, and it took us beyond the 78.6% kind of retracement of last resort. And we said, okay, perhaps this was just a 335 flat, which is the wave count in the indexes, or at least in the S&P. But now that we see this very prolonged wave 4 triangle, sure, we could square it up to this wave 2 back here, but that would make for a very disproportional move that doesn't quite fit the guideline of the right look. And so I got to thinking, what if the count that Todd presented to you guys back in September, or coming out of September of 2019, is actually the wave structure that's in effect? And what I see here is WX triangle in Y, which many people don't realize that is a valid pattern to occupy a Y wave position. We would then look at this as 1 and 2 and the ongoing wave 4 triangulation as a wave 4 that squares up to that wave 2 pullback. And when I went through and decomposed this structure and looked at the time projections of wave 4, time elapsed in wave 4 compared to time elapsed in wave 2, it really started to make a lot of sense. You can see within this wave 3, you've got a beautiful series of 1, 2, 1, 2 with progressively smaller corrections in the wave 2 position. So that meets the kind of fractal nature of Elliott. And you'll see that wave 4 of the blue degree squares up with wave 2. Orange 4 squares up to orange 2. Green 4 squares up to green 2. And wave 5 was 61% of waves 1 and 3. And it was also at 200% compared to wave 1. You'll also notice that moving into this wave 4, we're now into a very appropriate 4v2 time relationship. So very excited about Apple. I do think that this one's kind of been sleeping, very healthy consolidation, and I'm excited to see where that takes us. The last chart that I want to take a look at with you guys before sending you on your way is that of Alibaba. And I'm watching Alibaba here on the daily chart. And what's really interesting is we're kind of in a similar situation as to that of the Apple counts. Where does this wave 4 pullback fit in? Is this wave 4 of the higher degree wave 3? Or is this the higher degree wave 4 scoring up to the March low pullback like Apple? Notice this wave 3, just like Apple, was a 200%. The overall support zone that we've found support in is down at a 38% retracement of this wave 3. So regardless of if this was an ongoing wave 4 situation in a flat or a triangle, or if this was wave 4 completion, We took advantage of that with our members. Last Friday, we picked up just a call debit spread going out to December 11th. Picked that up for $1.70, sold it for $2.70, $2.75. Just a quick couple day trade. Stepping in front of a 20% downtrend, taking advantage of this initial move. And now, once this initial move comes to completion and we see some sort of a pullback to confirm our structure, we're going to be looking to get after this name again. So I find it kind of fascinating that we can kind of deduce the same wave structure here in BABA as we can to Apple. So that's it for me. I've taken up too much of your time this morning. Hope you guys have a good Thanksgiving. Back over to you, Todd.
Yeah, great work there. It's amazing, Bennett, that Apple WXY, that was the key. I think it was August 2019. Once I think we were the only shop out there who got this. Once that completed, Apple led the entire market higher. Not the case here. I think the Nasdaq's actually a little stronger than Apple, but yeah, that was interesting. Great work there. We've had some really nice trades as a team. Some good trades. So well done. Check us out there. And I know you guys are laughing at my glasses on the chat comments. My daughter Eden took mine, ripped them in half. So for about 3 weeks, I was like Revenge of the Nerds with my two glasses tied together before Warby Parker came to the rescue with my new geeky glasses. All right, guys, let's send it to break. We'll catch you on the other side with the sector spin doctor, I like to call him, Terry Long. See you guys in just a sec.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks. So it's been my mission to run an above board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day, we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hello traders, I'm Terry Long with your weekly sector focus. Looking at last week's performance in the index and sectors, one of the things I noticed, the S&P did pull back slightly last week, down about 0.77%. And it was more of a directional downslide. And the tech-heavy NASDAQ seemed to me to be a little bit more sideways. It was down slightly here. Once again, last week, energy sector continued to rebound, rising another 5.7% for the week. Now, on the opposite end of the spectrum here, the utility sector, which had actually been showing a significant momentum rise over the past few weeks, was actually the week's worst performer. It dropped nearly 4% last week. Let's take a look at what's going on Monday and Tuesday so far. Obviously, we've set a new all-time high here in the Dow, and the S&P is at that same level there. The NASDAQ is up, but not quite, not quite as in record territory. But look again what's going on. This is just Monday and Tuesday's price performance, guys. Energy stocks, again, up nearly 12%. Like Todd mentioned, coming off the bottom, if it is a bottom there in energy, there's been a huge opportunity, another big momentum push. I'm going to talk more about that here in just a little bit. We've got financials coming in second. And nobody's talking about that. Everybody's focused here on this energy move. Industrials, materials, and discretionary. And then here's the S&P is up for the week so far in our sector rotation. Let me zoom out a little bit here. let's start over here. The industrial sector is actually captured first place now in our relative strength ranking. However, all of our leaders, if you look at all of our leaders here, they actually are all seeing a declining momentum. Now, on a positive note, I do see the first inklings of a hook here in communications and technology. Look what's going on now. Communications has finally made this turn. You know, for weeks we've been talking about how short the tail is, meaning its resistance to continued movement in that direction. And we started to see a little bend last week, and now that bend is continuing. So I would look into this communication sector, possibly now consolidation completing in here, and we'll start to see some rise going on there. Same thing is happening in technology. Maybe not quite as sharp as communications. Communications may be leading, but I am seeing this bend here back in technology. We could see it rotate back on up and return to leadership position. Now, look at the XLE here. You've got this huge momentum push, right? Now, this is a similar kind of momentum push that we were looking, maybe not quite as drastic, in the XLU, right? So we're gonna pop into the XLU here and look, but what's going on? The XLU has actually decided to roll over, right? So XLU did not continue to shoot over here into the leading quadrant. It's actually now rolling back down, starting to decline in momentum. And if you look at the group of the stocks there, you'll see that general trend is happening there. Now, the inside here in the improving quadrant, both staples and real estate have also rolled over. The one thing though, I've been telling you about financials, we've been liking the horizontal look of the financials means it's been steadily gaining relative strength performance, still underperforming the benchmark S&P overall. But now just here in the last couple of days, we add what portion of the week we have here in this short trading week, we're actually seeing financials start to tick higher here. So we're gaining momentum and relative strength in financials. We're losing it in real estate. We're losing it in healthcare. It's reversing again in staples. So there's your overall rotation. I do see energy continuing this up thrust here and it'll be pushing itself up here into this improving. Now the energy sector's continued rebound actually began with this hook, and we can go back. We saw energy continue to push right about here. This is November 13th. This is the week of November 13th when I told you guys to watch this right here. And what have we been seeing for the last couple of weeks? We've just been seeing energy continue to push higher. And if this pattern continues, we could continue to see short-term gains in many energy stocks. But beware, my advice is beware of fear of missing out and jumping into longer-term positions, as this energy sector may be reaching near-term overbought ranges. And Todd and Bennett will nicely cover all that. I'll have a little bit more here for you, actually. So for my focus sector of the week, I'm going to cover energy, and let's pull it up here. And this beaten down energy sector, one which we have ignored for a long time and one in which most investors should have very low portfolio exposure. Here in the energy sector, you can see those same hook formations that I mentioned happening in early November in many of these beaten down stocks. And now you've got this rapid momentum rise. This reminds me a lot of what was going on in the utility stocks just over the past month also. Now, this vertical movement is increasing momentum. Now, while this may be a signal to lows finally settling in on these stocks, I think there will still be quite a bumpy road ahead as this energy continues to deal with challenging financial conditions, and likely we will see continued M&A activity in this sector. Let's pull up a couple of charts here and take a look at Concho Resources. This is a Permian shale producer, one of the independents. One of the things I notice here, I draw this downtrend channel line connecting these two highs. We're actually seeing Concho now breaking above that. So I think that this downtrend channel will now become support. A consolidation, I think, is due at some point here, but more than likely I'll be looking for this level right here to become a new support line. The resistance line will be obviously this prior high at 73. So you got about another $10 for this next major resistance level, and then this support level again about $10 below that. So I think volatility is going to continue here. Let me see. There's another one I want to look at here. Where did it go? Let's take a look at ExxonMobil here, right? So you got your oil majors here, and Todd was going to. Todd's been following this one as well. It's a company I used to work for. Coming off the pre-COVID tops, though, huge drawdown to like 20-year lows, or even more, down to 30. A big rebound all the way to 55. There's your next major resistance level here. A second bottom possibly in the works here. But looking at this, we really haven't broken through that downtrend line. Let me see if I can draw that real quick here. Draw me a line from there to there to there. So see what I'm looking at, guys, is I'm only seeing we're just right at the edge of this downtrend channel resistance. And if we continue to break higher, then again, I think that will turn into support. But I'm watching that closely, kind of hesitant. I think the chart of Chevron, let me find it buried in here. Where is Chevron? There's Chevron. Chevron's actually a little better. Chevron actually has already exceeded that downtrend channel high. There we go. Certainly. And we could even take that line back from up here and draw it through there. That's really what I need to do. Let's grab that, put that back up there, and drag that over there. Yeah, so similar to Concho, you can see that Chevron's actually penetrated this downtrend channel resistance line. So I like that. So independent oil producers such as Concho and Apache, I think, will benefit near term with rising crude prices. But integrated oil companies like Chevron and ExxonMobil with the downstream and chemical divisions will benefit also from increased demand for finished products. Again, like I said, I'm kind of reluctant to just jump in now simply on the initial rally off the bottom. If that is indeed the bottom, I would look for confirmation and then consider buying in on the next corrective move, provided we don't break to new lows. Also, I think the new administration will not be friendly to the oil industry and will likely reimpose regulations and remove access to federal land for future exploration, as they really want to focus the shift to green energy plays. I do think the energy industry will eventually recover, but they face continued downside pressure due to these various reasons. All right, that's it for now, traders. I'm out of time. Back to you, Todd.
Excellent work. Yeah, it's great to have your experience, Terry, carrying over to our business. Obviously, you've got a great fundamental background in the energy sector, and it's great that it's coming into play again, and then being as proficient as you are in the technicals. Lethal combination. So yeah, we're gonna hit probably the segment y'all are waiting for. You guys want to hear Alex talk about Bitcoin? I know. We're gonna hit that just on the other side of the break with Alex and Macro FX and Crypto. See you in just a sec, guys.
Hey there, traders and investors. Ben at Tyndall with TradingAnalysis.com. Hey, are you currently learning Elliott Wave, or perhaps you're considering learning Elliott, and you're looking for the perfect charting platform to not only make your journey that much more enjoyable, but to also shorten the learning curve in the process? Hey, if you find yourself in either one of those two categories, I would highly encourage you to check out our upcoming webinar event. This will be taking place this upcoming Saturday, November 28th at 1 p.m. Eastern, 10 a.m. Pacific. Todd Gordon, Terry Long, myself will be diving in head first, taking you through this particular powerful piece of software and talking about some of the key features and tools that we find absolutely critical to what we do every day here at Trading Analysis. Now, you might not already know this, but MotiveWave has their ongoing annual Black Friday sale in effect now through Sunday, November 30th, where they're offering 30% off this particular piece of software. If you're interested in taking advantage of the sale, you can go to tradinganalysis.com/MotiveWave. And if you're interested in joining us for the webinar event, you can go to tradinganalysis.com/webinar. Hey, thank you all so much for tuning in, and let's get back to the show. Take it away, Alex.
Hey, traders, hello again from me. So let's go quickly on the macro side, some FX pairs and famous Bitcoin already. So my wave X didn't hold last week, rightfully said by Todd. We continued on the upside, so we have to flip to a little bit more bullish outlook here for oil, but I think short term we are coming to the pretty nice resistance for this possible initial 5-wave structure on the upside. So I see ahead a little bit of two Fib ratios really confluence here in the zone of the 45-46 levels. So potentially I anticipate a small pullback and then to these support levels and then possible continuation on the upside. So let's go and check the dollar index. I have worked also on this chart last night in our macro update. So still the same, we didn't cross the K resistance down there at 91.72. So I'm looking for two structures here. I still have a B wave here for a potential hold and a move up. And then eventually, if we break these levels, I don't think the downside is pretty sizable. Potentially, this is developing in an ending diagonal pattern, which might go down to, let's say, 89, 89.50. And then definitely we are going to see after this 5-wave completion, some type of a pullback on the upside. So I don't think downside in a dollar has much room to go, potentially from here or from here we're going to see some type of a pullback, but in general I think 2021 is dollar lower. So let's check also one of the two subjects which are very in the news these few days. So our gold wave count is working pretty nice. After a move down in 3 waves and 3 waves pullback, we are still considering this to be a complex correction, and the key support levels here are at 1,747. This level is crucial to hold for a potential move up in this 5th wave. So key zone here is really needs to hold. As you can see, we have also a small confluence over 2 Fib levels here at 1,789 and 1,751. Alternatively, I have been working on another wave count, which will take gold a little bit more in this 4th wave consolidation. So this key level will be the key feature, which we are going to look in the next few days. I will show you also silver. Not much of a change here on this wave count, which we track. Still a very choppy, sloppy consolidation kind of pattern here. So I have this as an ABC, as a W, potential triangle or already finished X, and a little bit more downside move in cryptos as well. So in silver as well, down to 19, 18 levels, which I think will be very good longer or a midterm entry for a silver. So let's hit a little bit of FX here. So not much change on FX really. We have still a very long consolidation. ECB it's coming towards us very soon. So key zone is still holding. I would not take any firm stance here. This is also a very choppy, sloppy price action. We are keeping this 119 levels, but I will be careful here, as Todd usually is saying, when the markets try to break several times these key levels, maybe let's see here we have 1, 2, 3, 4 attempts, maybe on the 5th one it might break it on the upside. But anyhow, if we break, I don't think we have much of the upside. 120, 121, and then reversal. But I'm still keeping this chart alive for the reversal on the ECB and the big stimulus bazooka they announced on 10th of December. So let's hit famous Bitcoin. And the Bitcoin is basically hitting the key levels here. We have a very nice confluence of the fib zones here for the potential hold. Resistance 2017 highs. So I'm going to say be careful here if you're long. I think a small pullback is coming and then continuation on the upside. So post triangle trust, Todd's wave count on a triangle, I have a little bit different wave count, but actually this sequence is the same. So nevertheless, they're pointing out both of them for a potential correction down to 15,000, maybe even 13,200, whereas the two key support levels, 50% retracement, 38% retracement. So I'm looking this zone to hold, and I'm kind of looking for a very, very small ABC pullback down to these zones, which I think it's going to hold for a further continuation. So 2021 might be a very, very good year for a Bitcoin going ahead. So that's a very quick take for me, guys. So back to Todd.
All right. Thanks, Alex. I'm just taking the screen back here, sending it to me. Thank you very much. Yeah, good work there, Alex. And I appreciate how you're not catching into the euphoria of Bitcoin, which that's pretty much all that drives Bitcoin, right? I mean, and Bennett, maybe if Alex is still there, you know, we did CNBC yesterday talking about Bitcoin, and we did some big upside levels. If you just take on a semi-log scale Bitcoin, do the typical wave 5 projections, I mean, minimum I calculated was like 36,000. And if it's going to be a good wave 5, the upside projection would be almost 75,000. So, you know, from a fundamental point of view, what else is, you know, how do you value Bitcoin at a fundamental point of view? How do you get the intrinsic value? You know, there's just, except for there's like finite supply and it's portable. That's pretty much it. I know it's going to be a long discussion. Alex, if you want to jump in on that at all, let me know. But
sure.
Yeah, go ahead.
Yeah. So, I mean, as you know, as some assets class develop, there is a different narrative which comes along with it. So from the Bitcoin, I will just say that the first run up to 20,000 was a very questionable kind of a move on the upside with a small amount of people kind of cheering a new technology. But I think that the nature of the second rise from 3,000 to these levels now are quite different, because the narrative and the participants are completely different. So I see big hedge fund names. Yeah.
Institutions.
Yeah. So
yeah,
yeah, exactly. So the narrative.
Yeah.
Exactly. So I think the narrative changed, which is positive for Bitcoin. Adoption rate is bigger. We saw PayPal coming in, and the others might come in soon. The cryptos as a value holder or a kind of a safe assets is also gaining the narrative. So from the all fundamental aspects, except the stock flow ratio, we have a positive things here for a continuation of this bull run, and special institution coming in. I think the bull run is now on a more solid ground.
There you go. Well put for sure. And, you know, there's a lot of macro heavy hitting guys like Tudor Jones and Stanley Druckenmiller, and I think BlackRock's CIO came out. But again, if you look at some of the calls some of these large macro guys have made in terms of being bearish the stock market, they haven't been very good. And I'm not discounting anything you're saying, Alex. I'm just saying their track record lately hasn't been very good. So I'm always a little worried about what they say. But you're right. I mean, it's being adopted mainstream. Finite supply 21 million. So well put, well done. You know, in another kind of narrative, let me just hit this quick before we send you guys on the way and do closing thoughts. You know, there's been this big debate in terms of value versus growth. And what I have here, guys, is I have a growth, the Dow Jones growth index up here in the green and value down here in red. And, you know, what I would say is, you know, as the S&P is actually, this is the NASDAQ, because the NASDAQ is tracking, watch how the two are rotating within a fairly calm circle, which this is a 2 standard deviation, which is essentially a study of realized volatility. And they're kind of rotating around. Value's got the edge. And again, as you're heading more to the right side and heading to a 45-degree angle up here, that particular instrument has the edge. Or so we got the growth kind of coming up there in 2018. And then we circle back around, and then growth does a big hook in the right 2 quadrants, which is positive. And the point I want to make is watch the volatility explode and watch them almost jump orbit. Watch this move that happens. Wham. So we're rotating within a fairly contained growth versus value back and forth. And all of a sudden, what happens in March, April, May? Boom. A big move up towards growth. We're starting to see a little bit of a hook, but I think, there was a pretty seismic shift out to growth versus value. I'm almost concerned too many people are trying to call the end of the growth trade and rotate into value. This is down to the weekly chart, and it's going to be much more sensitive. Obviously, there's going to be 4 weeks within a month. Okay, I'm sure you can hear the kids yelling in the other room. But we are starting to see the value rotate towards the leading as growth is dropping out of the leading and weakening. It's starting to head here, but keep in mind, it can easily do one of these and just hook straight up, and value could hook straight down. This is on the weekly. So don't read too much into this. And then I want to give a lot of credit to, and I think this is the key to the market, I want to give a lot of credit to Julius DeCampner, who's become a really good friend of ours of Trading Analysis, and really helped us with the RRGs that Terry's become so very good at. And this is straight from his work. I'm not even going to pretend that this is my own thought. I want to pull large cap growth, mid cap growth, and small cap growth, which is somewhere here. Small cap growth right here. This is what Julius, who's the inventor of RRGs, came up with, which I thought was really interesting. It's not even hold on. Did I miss one? I did. Large cap, mid cap, and I even forgot to press it. There we go. Okay. So now we're looking at the 3 different sizes of growth. And this is the weekly. And this is very, very interesting here. Let me see if I can maximize this one a little bit here. It's not so much that growth is falling out of favor. It's the large cap growth that's falling out of favor. DJUSGL is large cap growth. This is small cap growth. And this is medium cap growth. These guys are in a perfect heading up and to the right. So all we're seeing is a rotation out of large cap FANG into mid and smaller cap technology and growth names. So it's not a value versus growth play. It's the size of the growth that matters. Sorry, guys. Size matters here. Oh, no. Please don't thumbs down on me on YouTube for that one. But so for these reasons, just the fact that they're rotating into small cap growth and mid cap doesn't tell me the entire growth value trade is going to reverse. Okay, then if we do the same thing and we bring in, let's bring in mid cap value. Let's bring in small cap value. You're going to see these guys are doing well, but not quite as good as the growth. So these guys are mid cap and small cap value right here. They're not even entering the leading or weakening quadrants. Again, these 2 right are what's leading it. So even the small cap, mid cap value are not where small cap, mid cap growth is. I think that's very interesting. I think these triangles that Bennett showed you, the consolidation we're seeing in the large cap tech, I think they're just kind of biding time into the end of the year. I don't think this trade is over yet. We are going to look to allocate some of our portfolio. I have a lot of large cap names. I am looking to add some names, and one that I did add to the portfolio was a solar name. Symbol RUN, Sun Run, really good looking stock that falls in these parameters here. Energy, we talked about that, but there's been some really good movements here in the solar. Let me just show you this. RUN, beautiful move up here. Just a nice little pullback here to the 50-day, starting to push back up. Check out that name, and we'll have other names out for the members of Trading Analysis. Alex mentioned bearish on gold. I have GLD. I've held it all the way from I've had it as high as 194, down at 170. Alex is bearish. If we break below the 200-day on GLD, I'm going to finally cut that. I've had that guy for a while, since March. I bought it in March 5th at 156. So I'll be looking to kick that one out at 170 if we break through the 200-day. So guys, that's a wrap. If you don't mind, throw a thumbs up, not for me, but for the great trade analysis team and the production that goes into the show. You wouldn't believe the work these guys do in the background. So please throw a thumbs up in the YouTube window. Bennett, talk to me. We have the Black Friday Motive Wave sale.
Yeah, we've got the Black Friday Motive Wave sale till the 30th. Yeah, and the webinar will be this Saturday, the 28th.
And how do that link will be below this YouTube window? Can we get that in there?
Yep, certainly. And you guys can go to tradinganalysis.com/webinar to get signed up for the webinar. And if you want to just take advantage of the sale, tradinganalysis.com/motivewave. I'll drop both of those in the chat.
Great. Yeah, so thanks again, guys. Great job. Again, please put the thumbs up. Let the Google algorithm know that you're watching and you like the work. Throw a question, comment, insult below, whatever you got. Check us out at tradinganalysis.com. Thanks for joining us. I know your time is valuable. Really appreciate you guys spending time with us, and happy Thanksgiving, everyone in the U.S., and happy for everyone who's got something to be thankful for. Enjoy the day off and the half-day Friday. Rest, relax, get ready to roar here into the end of the year. I don't think it's going to be dull. So Alex, Terry, Bennett, thanks guys, great job, and now we'll see you guys in the member webinar in 20 minutes.
Sounds good. See you guys next week. Take care.
Happy Thanksgiving.